Welcome back. Is history in danger of repeating itself, or at least rhyming, as the current AI craze has some harkening back to the dot-com crash of the late 90s? Too many stocks up too far too fast on the promise of riches down the road. We all know how that ended. Gene Munster, managing partner with Deepwater Asset Management, joins us now. How do you think about that question? Are we at least rhyming?
Well, I'm always looking for the rhyme, Scott. Of course, we're never going to see it perfectly mapped to what happened 25 years ago. But I want to first kind of mark where we're at, mark the moment here. This is a big week that since GPT made its debut in November of 22, the Nasdaq's up 100%. Typically over that period, it would be up like 25%. So this conversation is most appropriate. And the reason why these bubbles happen is outlandish behavior starts happening from investors. And this comment that I'm going to make may fall into that category for some people. Is that a few months ago I thought we're in the third inning of the AI build-out, the AI trade. Now I think we're in the second inning, and that's based on what we've heard from the big CapEx, the big spenders, hyperscalers after the June quarter, and also more recently from Zuckerberg and CFO Susan Lee at the Goldman conference, and from OpenAI, Oracle, NVIDIA, all of that put together. Scott, I think there still is a massive amount of investment. I think that investment will lead to these valuations going higher. One other piece about the rhyming part.
Yeah,
no,
go ahead. Go ahead. No, go ahead, Gene. You paused. I thought you were done. Please go ahead.
Right on. The rhyming part, one more on this rhyming part, is I think one piece that we're going to see is these companies that are so loved by the AI trade, the private companies, whether it's OpenAI, XAI, Anthropic, Anduril, none of these are public yet. None of them have seen this crazy public euphoria around it. And so at a very high level, it's hard for me to imagine that we're at the end if, in fact, we haven't seen some of these biggest companies have their breakout period in the public markets.
So you mentioned the Nasdaq up 100% since November of 22. We looked at some of the groups within the AI story. The hyperscalers, the Googles, the Metas. Meta's up 579% since November 30th of 2022 when GPT was announced. NVIDIA's up better than 1,000%. The so-called others of AI love. Dell's up 200%, Oracle 250, IBM is almost a double. The power companies that get a lot of love, utilities that are now modern-day growth companies. Vistra 725%, GE Vernova up 355%. It's why Ken Griffin probably said what he did on CNBC last week. I want you to listen.
There's obviously echoes of the dot-com bubble in this moment. All right, and let's take a step back. The dot-com bubble, there was a huge amount of capital that flowed into what today we refer to as the internet. Now, the true winners and losers were not readily identifiable at the start of that whole bubble. But move forward 10, 15, 20 years later, there's no doubt that the world was radically transformed by that moment in time.
It's interesting when he says, quote, now the true winners and losers were not readily identifiable at the start of that whole bubble. Have we decided that we know who the winners and losers are this time, or the ones that we think? And they're the names, the very names that I read off those lists to you?
I think they've been a winner. I think that there's a whole nother class of companies coming, these AI-first companies. There's a handful that I mentioned, those 4 that I mentioned, that are at the top of that shelf, kind of this golden list. But we spend time in our venture business and look at these other kind of emerging companies, and they will be, I think, a whole battery of $100 billion plus companies that most investors don't know about. I think this it is important to focus on kind of how narrow that trade has been, like you just described. But if, in fact, the impact is as big as I think it's going to be, then it's going to kind of spread out. I go back to Walmart's CEO comments last week saying that AI will impact literally every job. And I pause and think, like, how many jobs are being impacted by it today? And the answer is few, very few. And so when I think about, the class of companies, I do think it's going to spread out. I think you're going to see better performance more broadly with some of these smaller companies over the next 1, 3, 5 years. I also think, again, there's this new class. We haven't seen them. We've seen a few of them. CoreWeave, Reddit, but we really haven't seen the private class. And those are the companies that are growing. If you take OpenAI, $2 billion last year, 13 this year, 26 next year, expected to be 200 by 2030. Like, that is the exciting part. And so I think until we get to that, just that kind of that breathtaking, investors can really get a solid eye on that. I don't think they're at the top. One other piece I want to mention. This is really healthy for the market. The conversation about the bursting of the bubble is, of course, healthy for the market. I remember being an analyst back at Piper Jaffray in the mid-late 90s and thinking this is going to go on forever. Like, the concept of a bursting bubble just wasn't in the conversation. And I think because that was such a painful moment, I actually don't think we're going to get like a spectacular, I've described that in the past, a spectacular bursting. I think what will happen is we'll get a move in the market for the next 3 years, continued massive outperformance. But then I think it's more or less going to be more of a dip or kind of a steady, a leveling off versus this big blow up that everyone's expecting.